Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LOPAL TECH interim report. Jiangsu LOPAL TECH Group Co. Limited offers a diverse range of products and services across various industries. The company's portfolio includes automotive products, lubricants, grease, coolants, brake fluids, chemicals, and maintenance products, lithium battery materials, hydrogen energy solutions, environmental protection, fine chemicals for vehicles, industrial lubricating, grease sterilizing, and disinfecting products, plastic containers, and packages. The company operates under 3 brands: Longpan, Clansu, and Dick, with a presence in China and internationally. Jiangsu LOPAL TECH Group Co. Limited has established itself as a prominent player in the research, development, production, and sale of innovative materials and products. The stock price of Jiangsu LOPAL Technology Co. Limited has skyrocketed by 152.14% in the past year due to several key developments and positive market trends in the lithium iron phosphate (LFP) battery materials sector. The company's major procurement agreement with CATL, a leading Chinese lithium battery maker, is a significant contributor to this surge. Additionally, LOPAL TECH has secured long-term supply contracts with other prominent companies such as Chuneng New Energy, LGES, and Blue Oval. The expansion of overseas production capacity, particularly in Indonesia, has also played a crucial role in the company's success. Furthermore, LOPAL TECH's inclusion in the Stock Connect program and its application for a main board listing on the Hong Kong Stock Exchange have increased investor interest from mainland China, driving up the stock price. The positive industry outlook for lithium iron phosphate batteries is another factor contributing to LOPAL TECH's stock price increase. Projections indicate that China's LFP battery shipments will surpass 1.3 TWh by the end of 2025, driving growth in the upstream phosphate cathode materials market. Overall, these developments have created a perfect storm of factors, contributing to LOPAL TECH's remarkable stock price surge. The primary drivers of revenue growth or decline in the company's financial summary can be summarized as follows. Revenue growth drivers: overseas market development and expansion, long-term supply agreements with major companies, increased sales volume of key products, such as LFP batteries, innovation breakthroughs in automotive specialty chemicals, introduction of new products with enhanced performance. Revenue decline drivers: intensified market competition leading to a net loss in the first half of 2025, decrease in revenue from certain customers and regions, including Taizhou Changningrui, -37%, Nantong Judu, -12%, and Taizhou Hengan, -64%, decline in average selling price of LFP cathode materials, -6.5%. Net income and profit margins: a significant improvement. The financial performance of the company has shown a notable improvement in net income and profit margins over the past year. Net income has surged by approximately 45.7%, rising from RMB 344 million in 2024 to an implied gross profit of RMB 501.2 million in 2025. This significant increase can be attributed to 2 key factors: reduced costs and improved gross profit margin. The company's efforts to control procurement prices and explore new sourcing channels have led to a decrease in costs, contributing to the enhanced profitability. Additionally, the gross profit margin has increased by 45.7%, further boosting net income. The improvement in profit margins is a testament to the company's effective cost management strategies and its ability to adapt to changing market conditions. As a result, the company's financial performance has shown a substantial upward trend, indicating a strong foundation for future growth. The company's financial performance indicates a positive trend in its operating cash flow. Despite initial unutilized funds and expectations for full utilization by end of 2025, various indicators suggest that the company is indeed generating positive operating cash flow. The decrease in net current liabilities exceeding the decrease in non-current assets, page 34, and the increase in net cash from operating activities, pages 38-39, support this conclusion. Specifically, the company generated RMB 28,275 from operations in 2025, with a positive operating cash flow value of HK dun million 539,048. The company's financial performance reveals a notable increase in its debt level. Total liabilities rose from RMB 12,032.2 million to RMB 13,991.4 million between June 30, 2024 and 2025. This significant increase is evident across multiple pages of the summary. In contrast, interest expenses have remained relatively stable or decreased slightly, with finance costs increasing by only 8.2% from RM-100 and $30.4 million in 2024 to RM-100 and $41.1 million in 2025. Overall, the company's debt level has changed significantly, while its interest expenses have shown minimal variation. The company's financial performance varied across different segments and regions. The overseas market development and LFP plant production bases showed strong growth, while the automotive segment and processing cathode for lithium carbonate and other businesses also performed well. However, some areas underperformed. The specialty chemicals business struggled, as did the lithium materials business and the LFP business, which saw declining performance in multiple regions. Management's outlook and strategy. The company is prioritizing innovation through R&D, diversifying its portfolio of cathode materials, and focusing on breakthroughs in fuel cell catalysts. To strengthen technological capabilities, it will maximize capital utilization efficiency and adopt prudent funding policies. Additionally, the company aims to manage foreign currency risk and invest in significant acquisitions and subscriptions to enhance business operations. Overall, management is committed to driving growth through innovation and strategic investments. The company has a history of paying dividends to its shareholders. This is evident from the financial summary, which specifically mentions that dividends were paid to non-controlling shareholders in the amount of RMB 4273. Concerns about inventory buildup and supply chain disruption. There are concerns regarding inventory buildup within a company. Data from December 31, 2024 to June 30, 2025 shows that finished goods increased by 15%, indicating an accumulation of stock. This suggests potential issues with managing inventory levels. However, there is no evidence of supply chain disruptions in the provided information. That concludes the financial summary for LOPAL Tech. Feel free to comment below, and I will be happy to answer them when possible.